I hope everyone is doing well. For today's video, I'd like to go over Chapter 2's debits and credits. Debits and credits is very important. It'll be the foundation for the rest of this class and for future accounting classes. Let's go to the first problem. The first problem says, for each following accounts, indicates the effects of debit and credit and the normal balance. Now, what a debit and credit does to each account will depend on the kind of account it is. Start with the first one, number 1, accounts payable. Because it's a liability, a debit will decrease the account. So a credit will do the opposite. A credit will increase it. So all liabilities are increased with credits and debits decrease them. And the last one says, who has a normal balance? The normal balance would be, what's the balance going to go on the trial balance? Now, because accounts payable increase with a credit, normal balance would be a credit. So whatever side increases it, debit, credit, that'll be the normal balance. And that side has to be higher than the other side. So for this example, credits have to be higher than debits because it's a liability. Okay. Let's go on the next one now. Next one is advertising expense. Expenses are actually increased with debits. And a credit will do the opposite approach. It will decrease it. And the normal balance, because it increases with a debit, it'll be a debit balance. Continue on now. Now we do revenue accounts. In this example, it's service revenue. Debits decrease revenue accounts, and a credit will increase it. And the normal balance for this would be a credit balance. Now we move on to assets. All assets are increased with debits, and a credit will decrease it. And the last part, normal balance would be a debit balance. Next one now, owner's capital. Now, remember class, that's the owner's investment in the account. What did the owner put into the account, such as cash or other assets? A debit will decrease it. And a credit will, of course, do the opposite. It will increase it. And the last part, the normal balance would be a credit. And the last one for this example is owner's drawn. This is when the owner takes out assets for their personal use, such as cash or equipment. A debit will increase it, and a credit will do the opposite, it will decrease it. Okay, the last part, normal balance will be a debit. Alright, next one now. Now I want to talk about transactions for each one. You want to record them. Well, first, put the date down. So for the first one here, it would be June 1st. It says here, George Lynch invests $5,000 in a small welding business of which he is a sole proprietor. Now, remember class, for each transaction, you must always affect two accounts. At least one debit, at least one credit. You can have several debits and one credit, or the opposite, several credits and one debit. And remember, debits always go first, even if you have several debits. So, in this example, you gotta see what accounts are being affected. So I look at this account and said, alright, see cash and owner's capital is being affected. And also, then, are they being increased or decreased? Well, I see cash, of course, being increased because it's going to the business, and capital will go up. So they're both going up. So I'm going to start by debiting cash for the $5,000 because cash is an asset, and assets increase with debits. And of course, the opposite, you want to credit owner's capital. Because remember, owner's capital increases with credits. Next one now, add June 2nd. So you purchase equipment on account for $2,100. Now, equipment is an asset. And again, assets increase with debits. So I'm going to start by debiting equipment for $2,100. Now, I bought it on account. That means I have not paid anything for it yet. When you do that, that's a liability. You want to credit accounts payable for $2,100. Okay, next one now says, you paid $800 cash to landlord for June rent. Well, rent is an expense. Expenses increase with debit, so you want to debit rent expense for the $800. And what do you use to pay for it? Well, you use cash. So you want to credit cash because cash is going down for $800. And the last one, on June 12th. You send a bill to Madeira, $300 welding work performed on account. That means you went, you did a job, you haven't gotten paid for it yet. Remember, you want to increase that asset account called accounts receivable. You remember, assets increase with debits, so you want to debit that for $300. And then, an accounting says, the GAAP, that you record revenue when it's earned. And since you've earned this, you can record it. And revenue increases with a credit. So you want to credit service revenue for $300. All right, so now, number 3 now. Number 3 says here, you look at the trial balance. Now remember, class, you start off, you look over your transactions, you record them. Once you get the balances, the next step would be to put on the trial balance. Now, as you can see here, it says, an experienced bookkeeper prepared the following trial balance. Some debits and credits are in their right spot. That's what I talked about. If it's an asset, it has to have a debit balance, and so on. Another key thing is, remember, the total debits and credits have to match. They have to equal. Okay, so we start with the first account. Start with cash. That is actually correct. You start off with a debit, $10,800, because it's an asset. Assets have debit balances. Now proceed to the next one. Prepaid insurance. Now, prepaid insurance is also an asset, so it should also have a debit balance. So it should be $3,500. Continue on now. Now we have accounts payable. Now, accounts payable is a liability, so it should have a credit balance of $3,000. Continue on now. Now we have unearned service revenue. This means you receive the cash before fulfilling your obligation. So this is a liability. Remember, liabilities have to have credit balances. Okay, we continue on now. Next one here says owner's capital. Remember, owner's capital has to have a credit balance. That'll be $9,000. Continue on again now. Owner's drawings. Okay, owner's drawings have to have a debit balance. That should be $4,500. Okay, next one, we have service revenue. Service revenue, remember, that has a credit balance. That'll be $25,600. Okay, the last two are expenses. Remember, expenses have to have debit balances. The first one, salaries and wages expense. That'll be a balance of $18,600. Okay, the last one, rent expense. That'll be $2,400. Now, the last part you gotta do is you must total them all up. So, total the debit column, I have $39,800. And my credit balance will also be $39,800. Now, if they didn't match, something was wrong. Maybe you double booked something, maybe one was too high. These amounts have to match for it to be correct. Now, if you have any questions or comments you'd like to speak with me, please feel free to contact me. Hope everyone has a great week. Thank you. Bye.